Bitcoin looks completely stuck. The price isn't moving. Everything goes downhill from here. That's the current Bitcoin sentiment. And today with my guest, Dr. Murray Rudd, we uncover why this is where most people get it completely wrong. We are not talking about any price predictions or hype or anything like that today. We talk about leverage, Bitcoin financializing, and why this is the calm before the storm. And also one more thing, why in those cycles that we are in, there are short periods where the most violent upswing of Bitcoin is in very short amount of time. If you hold Bitcoin for 1 year, it's only a few days where the most amount of gains are. And nobody can predict those days. That's why you just hodl and you DCA into Bitcoin for the long run. You just don't know when those days will be. Enjoy. How has the Bitcoin price maybe surprised or not surprised you, as it's severely underperformed even the US dollar and massively underperformed even gold and other assets?
Yeah, it's a sort of funny thing. I think the last time we talked, I said I wouldn't be surprised if it went down to $100,000. And then, of course, it's gone substantially lower than that. But I think there's some pretty important lessons in there, and like what's been happening, and Bitcoin price out in the marketplace is it's a function of both marginal demand and marginal supply. And so that's like economics talk, but it's like the incremental, who is really active out in the market and trading actively that's setting the price. So, you look at what's going on, and we sort of lost Bitcoin in the debasement trade. Gold and silver went like through this multi-decade, basically basing pattern, and then broke up, and they've just gone insane. Silver was just about, I think it was $100 this morning, or just a touch under, and gold's heading towards $5,000, and Bitcoin's just lagged, like you said. So you have to start looking at, well, what's really going on out there? Like some people have talked about, there's been a lot of supply coming back onto the market. So there's a lot of OGs, a lot of whales that maybe were believed to be out of the market altogether. Maybe they had lost coins, but they've actually just been holding them for a long time. So some of those are coming out. My own personal suspicions on that is that maybe some of the old miners, in particular some of the Chinese miners, might have different opportunities. So they're taking money out of Bitcoin, and maybe it's going into AI trades in China or internationally. So there's a lot of things, and of course with gold and silver way up too. So what I think is that we've seen supply come back to market that wasn't really maybe expected. I don't think that's a huge impact myself, like it's in the overall picture, because we've been seeing lots of supply getting withdrawn from market. You look at Michael Saylor's buys and other institutional buying. So the supply is not the major thing. I think what we really are seeing is like this up and down on market demand, especially among these incremental buyers. So we have people that are, like I said, moving to AI trades or moving to metals, anything to do with energy and infrastructure build out right now. Those are all really important areas. So it might be that people who are more oriented to trading are going to be taking some of their Bitcoin money off the table and moving it into other areas just to try to diversify. So that's what I suspect is going on. But market sentiment has just been awful. So if we look at where we are probably relative to where, in theory we should be, we're probably like a couple of standard deviations down on the market demand side. If we look at market demand curves, they're probably pushed down quite a bit below the mean. So I would generally expect to see like a bounce back at some time in that. We have a bit of quantum FUD out there right now too, which might be having a slight impact. But I think that's probably relatively minor compared to like sort of the bigger picture things going on right now.
Yeah, 100%. I don't know how much has this all to do also maybe with like liquidity and interest rates, and maybe a new Fed chair is kind of changing the maybe we also get back to quantitative easing, quantitative, quantitative easing,
Quantum easing.
quantum easing, but like getting back to basically starting the money print in a very big way. I also heard a
Yeah,
crazy statistic. There's like 1/3 of the debt is due like 2026.
yeah, yeah. No, it's pretty frightening looking. Yeah, liquidity is certainly like a big issue, and there's it always is for Bitcoin. So yeah, if we get a very dovish Fed chair coming in, which we probably will, then they're within the U.S. That means they'll probably like drop rates and sort of run the economy fairly hot for a while. So liquidity should be good there. There's a couple of other things like out and sort of on the radar screen as well. So all the problems in Japan right now with their high yields and the debt. Basically, they're looking at like some real financial problems over there. The government's going to have some hard choices to make. I don't remember where I saw it. It was just on one of the pods fairly recently. It might have been, one of the Bitcoiners maybe that does macro stuff. There's been some talk about China basically doing like indirect, putting pressure on the U.S. indirectly by taking actions tax related and exchange rate related with Japan. So, some people are speculating that might be some Chinese moves to pressure the Japanese market, which might then spill over into the U.S. market and cause problems in the U.S. So it's really hard to say. It's really complicated. And there's a lot of moving parts, a lot of possibilities. So it's not clear like which way things are going to go on the liquidity side, but certainly important.
The next thing for me was the 2,000 hours that you put into the podcast, because it's a lot of material. And I think you've written, 30-page document that I've seen. What have you learned about the threats to Bitcoin, the opportunities, like the knowledge gaps, all the things that we've been discussing on the various podcasts?
Yeah, so this is actually the third year that I've done this. I did it for 2024, 2025, and 2026. So I think I've done like over 6,000 podcasts now have been summarized. So I started back with getting GPT 3.5 to help me when I started it. And now of course, we're way up to 5.2 with OpenAI. And I use the AI tools to basically I scrape the podcast content that I want, um, pull that into a data set, and then do a series of individual summaries of episodes. Um, and what I do for each episode is go through the discussion and see, well, what are the real threats and opportunities that were discussed? And I pick 10 of them for each podcast issue. And then from there, I develop candidate research questions. So what are research questions that could be asked that are really important for policymakers and decision makers? And then from there, I take it. So I get 20 questions per podcast and narrow that down to 5. Then for this year, like it was just a touch under 2,300 podcasts that I summarized. Those 5 candidate questions from the pool from each episode went into a big pool, and then it was a sorting process to identify the different themes, and then within the themes, the most important questions. And so it was like a quite in-depth process. The results from the paper, we started off by like having these high-level themes, and then identifying key questions within each theme. So the first theme that came out of the 2025 podcast space discussions was basically the high level issues around macroeconomics and monetary systems and financial stability. So we had like a bunch of different questions in there, and they really started to get at some higher level interactions within this theme. In the past, the questions were like in 2024 and 2023 and 2024. The paper or the questions were a little bit simpler in scope. And now we start to see this year there's the level of sophistication in the Bitcoin discourse has really stepped up a little, and so we get into things like institutional dominance, and I'm just looking off screen right now just to pick a few of them: bank stress, deposit flight, There's real yields and opportunity costs. So there's different things along this. There's also a section in there about stable coins and dollar liquidity, which is becoming more and more important, I think, in the Bitcoin space as well. So that was the first major topic.
This was interesting because is that because TradFi is now coming into Bitcoin? Like there's a lot of fiat knowledge basically coming towards Bitcoin now?
Yeah. Like it's like a lot of these questions are related to the plumbing issues, and so how does how does Bitcoin actually fit into the legacy financial system, and what does that financialization start to mean? So what are the higher level or the higher order impacts of what goes on as financialization occurs? So it's an interesting um, set of questions, and I think there was 14 separate research questions within this one theme, so it was quite large. And of course, the criteria that I used developing and sorting these questions, and then going through and doing my own review and sort of finalizing them, was that they had to be relevant for policymakers and decision makers. There was other criteria as well, but I didn't want things that were like academically, interesting to academics, but not without any real world consequences or implications. So I really leaned heavily into what information, if we could provide it, would help out policymakers and decision makers within the larger financial space.
Interesting. I like that view because it shows that there is a lot of people, a lot of more knowledge in Bitcoin now about the macro picture. It's not just like Bitcoiners saying like this is the best thing because it's P2P cash. It's just like now Bitcoin gets kind of sorted in this bigger macro picture.
Yeah, it does. And like there's definitely some downsides to that. And that comes up more in the follow-up in the Bitcoin World's paper. But I mean, when you financialize anybody with a sovereignty first view, that puts importance on peer-to-peer transactions, that really emphasizes self-custody. There's a lot of, you always have this trade-off of risk in different systems. So um, a lot of these questions in this first theme are really about how Bitcoin fits into the legacy system. It doesn't say anything about whether that's a good thing or a bad thing per se. That comes up like later on in some of my work and how you look to balance out. But irrespective of what your personal viewpoint is on that sovereignty sort of stability balance, um, these questions will be important for policymakers. There's no doubt about that.
Awesome. And then I think the second one that you wanted to bring up was like liquidity, not the liquidity, the concentration of the coins.
Yeah, and again, like what we discussed before, like what will probably be edited out was that I'd like to actually come back to that sort of as the final lessons, and so because it comes out obviously in this section on the macro and monetary systems and financial stability. Part of that, the liquidity question, it comes in there, but it also comes up in some other places. It's more of a cross-cutting theme. Um, Within the theme or the second theme within the results that I had was really that got into this nation state and geopolitics and sovereignty debate. So there was a number of questions that came up at the higher level, and this also obviously affects liquidity along the way, and as well as things like custody. So again, strategic Bitcoin reserves and things like sanctions and financial bypass, regulatory arbitrage, so jurisdictional are so people moving or businesses moving to friendlier environments, and then of course energy and sort of the higher level conflict issues, and there's just a whole bunch in here. And again, there was like I think it was a dozen questions in that section about geopolitics and international sovereigns.
It's kind of fascinating how much you can learn from so much podcast content, especially if you have tools like AI now, for like summarizing and digesting everything. It's fascinating.
Yeah, it's really cool. Like the first year I did this, or the first horizon scan that I ran, I did it myself. This was pre-AI, and so I did a mining oriented scan back in 2023. And like I've done this horizon scanning work now since going back to like 2007, 2008 was when I started. So I've done a lot of this work in the past. And these used to be these exercises where you get like a core group of 5 people and we'd solicit questions, candidate questions from the whole community, whether it was ocean sciences or environmental toxicology. Those were some of the ones I worked on before. But now with AI, you don't have, it's not structured interviews like traditional qualitative social science, but you just have this tremendous body of knowledge out in the podcast space right now. I mean, you get top level experts and government people and practitioners and developers. And all this is just this huge, huge body of knowledge. And what happens in the practitioner space? Like, I'm interested, this is my, in some ways you can think of this is my way to encourage researchers to like focus on Bitcoin. But if you think of you might have a logistic adoption curve amongst academics and policymakers, you can think of that. But the signal within the Bitcoin space is way in advance of what's happening in the research world. So, these issues that are coming up now in 2025 and came up in 2024 within the Bitcoin space really aren't on the radar screen of researchers, just because of the slow timelines that research has traditionally had, bringing these things to the forefront.
And it might also be similar to what the Bitcoin Perception is doing to a certain degree, if you're familiar with their work.
Yep.
And I had him recently on the podcast, and he said two interesting things that, and would be interesting enough of how what you found around that. He said there are FUDs that died in 2025, like the environmental FUD that is barely now in the discussion, and also that the question is no longer about will Bitcoin be a thing, more of like what thing Bitcoin will actually be. So like the fact that Bitcoin is dying is kind of died.
Yeah, yeah. And what that second point, I picked that up exactly in this scan as well. Exactly the same thing. It's not the simple questions anymore about like, what is this? Is Bitcoin like a hedge and things like that? It's really about oh, great. Now I've got a whining dog down on my feet too. This podcast is full of things. Um, yeah, the way in which narratives develop, like they're important, and like I said, they're becoming more sophisticated within the Bitcoin space.
Yeah, they develop and they get more sophisticated. It's fascinating to think about how strong the Bitcoin community has developed and how sophisticated actually the discourse within Bitcoin is. I mean, sometimes also not. Sometimes we are pretty unsophisticated, but like
Yeah,
mostly it's like it's getting strong.
yeah, yeah. Okay, I gotta grab a dog just to get him to stop barking. Okay, I think we visited before on the pod, so that's Douglas or Doug.
It's a reoccurring theme, I think. It was the last time he was also here.
I saw some comments though on your on the episode later that somebody didn't like having the dog on the podcast, but it's like honestly, I've got this like soundproof room, except I keep him in here so he's not scratching on the door, and I was hoping he was going to sleep the entire time, but maybe not. Okay, see if it goes down. Okay.
Yeah, like with negative comments, I've learned one thing. For every one negative comment that you get, there's like 100 people that actually liked it, that haven't said anything, or that maybe said something but like haven't said something publicly. So it's like you tend to focus on the few people that let it. Like if you see a normal video, it might get like, let's say, 10,000 views,
Mm-hmm.
and around those 10,000 views, you might get 200 comments. And from those 200 comments, maybe like 20 are negative. And you focus so much on those like 20 negative comments,
Yeah.
even though there is like 10,000 people that watched it. There's maybe like, I don't know, 1,000 likes on the videos, and like most comments are like positive. So that's always my learning of negative comments. They usually a minority, and the silent majority actually loved that there was a dog in there.
Okay. Well, that's good to know. Hopefully he'll calm down a bit. I see he's back down on his pillow and looking like he's going to fall asleep again.
Then let's keep going about like
Yeah. The
the
other
things
point
that
back.
you're saying. Yeah.
Yeah. Yeah. Back to the other point that you mentioned was the environmental sort of criticisms of Bitcoin. Yeah, they've just about disappeared. Um, I mean, you're still getting articles coming out in the academic literature that are critical of Bitcoin, but they just don't seem to be getting any traction right now. At least in the social media space, maybe in academia, they are a bit more. I, there was a big paper, an important paper came out in one of the Nature journals sort of later last year about the environmental health impacts of Bitcoin mining in the US. And they used the data that Gabriel Dance from the New York Times had collected as part of his investigative reporting on Bitcoin mining in Texas. And like a couple of years ago, that would have been all over the news. And like, I didn't see a peep about it on like in the social media at all. So it's some of it's still there, but that paper, I talked about this in another pod last week, specifically on Bitcoin mining, was that there's some just awful assumptions that underlie some of the academic research. And so in this particular paper, they were looking at Bitcoin mining, and they weren't accounting for any um, ramping up and ramping down of mining during like when prices in the markets varied, or like during grid management or anything like that. So it just really, for anybody in the Bitcoin space, anybody that understands basics about mining, you look at some of the academic research, and it's just so completely irrelevant just because their assumptions are so off. So I think that's also part of it, that there seems to be a wider understanding within academics now, and maybe especially within the policy shops that use academic research, that a lot of this is pretty seriously flawed. And then the other thing is, I don't know if you watch the Moonshots pod at all. Um, but it's really interesting for like tech advance in general. And I think they made one of the people on one of their panel members made a really salient point. I think it was just like yesterday or the day before, so like January 20th or 19th, and it was to the effect that all effort right now, like for on energy use, energy is so focused into pushing forward AI and developing AGI, which we may or may not be at right now, or like in the near future, and then towards ASI, like a few years down the line. And there's this view that we need to invest in the energy and put the energy into AI to be able to solve the environmental problems, to be able to solve the health problems, and that it just seems to be like we're taking maybe a bit of a risk with that. But given the speed of development in AI, it just makes sense that a lot of these things that we were really a few years ago, like the environment and climate change, a lot of people within that environmental space were very, very skeptical of any technological changes coming. So now we have Bitcoin was sort of the first signal, like that data centers were really important, and that energy is a currency. And now we're also getting energy is the basics for intelligence. And if intelligence goes like 1,000x, like some people in that space are saying, that we're going to be able to start solving problems that might have seemed intractable before, but now they're not. So that's just an aside, going back to the comments that you had about from earlier on.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relai to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relai, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called MicroSeed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With MicroSeed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io. Yeah, I think we need to invest. If the solution is just like turning all the energy down, I mean, then you can also erode all human progress that we made the last hundreds and maybe even thousands of years.
Yeah, it's really interesting. Like having worked in environmental studies and environmental science, like for like my whole academic career, um, we used to have a lot of discussions about like, oh my God, like the world's just so depressing. Like, and we like a lot of people would never say in public that we've passed a tipping point, and that we have to, instead of mitigating the climate change impacts, cutting them off at the source, that we need to increase our adaptability. And the reason that that view was so prevalent was because there was a lot of technological pessimism. There was no hope that something would come along that would, maybe help solve these problems. And now when you look like within Bitcoin is a financial tool, is a financial technology that actually might help shape like human preferences. So we get these time preferences that are coming down. So we're starting to consider further in the future. But at the same time, we're getting this AI push that is making everything uncertain as well. But it's potentially opening up all sorts of new solutions to problems that we couldn't solve before. So, there was a lot of private pessimism where a lot of people would say, oh, no, our institutions can't move fast enough. Our science and technology isn't going to save us. Maybe we have the science and technology side like coming into focus now. And then the next challenge like that I see, and this is way a tangent from the paper, but the way I sort of see this developing is that governance really needs to be take advantage of that intelligence too. So we have to come up with ways to make really good choices in very quick timeframes, not the typical political time spans that things have taken historically.
I agree with that. This leads me anyways to like an interesting topic of the role of nation states and geopolitics in Bitcoin. Is it also something that you've looked at, how much nation states and election of politicians and geopolitics at large play a role in Bitcoin now?
Mm-hmm. And, well, they do, and that was like what was picked up in this Horizon scan as well. I mean, um, I'm just looking at some of the questions. The idea of sanctions and financial bypass, like the Bitcoin's impacts on that. So we start to get in this world where there's maybe less control at the nation state level, but there's increased predictability, like that comes from potentially having something that you can't sanction. Um, there's regulatory tax features, like at an international, how does that drive capital and compute and talent across borders? And we're seeing that right now. We're seeing everything going on in El Salvador and this migration of people into El Salvador that are investing and, building basically the educational and the financial infrastructure that will influence its future development orientation. Energy geopolitics is super important too. I mean, we start to look, the role of Bitcoin mining. You look at a place like Bhutan right now, and they're mining Bitcoin entirely on hydropower that comes, water flowing down from the Himalayan mountains. And there, nobody can exclude a country from participating in the Bitcoin monetary system because all you need to do is mine Bitcoin, and the competition, and the rewards will vary up and down. But you can't exclude anyone. So there's these very important geopolitical questions that continue to rise up and like will continue to develop over the next few years.
Yeah, it's quite fascinating. The whole space is really changing because we have the nation state debates now in Bitcoin. We have the ETFs and the institutions, and I mean, treasury companies we haven't even touched on today. There's a whole new thing that I think came in the last like 1.5, 2 years really to the space. How do you look at treasury companies and the role in Bitcoin?
Yeah, I'm leaning more and more towards like that sovereignty first side of the equation. So there's some things that I have like cautions about, like, and I know that like companies like MicroStrategy are involved in new types of engineering for financial products, and that's um, say for institutions, for investment funds, for hedge funds, or for like sovereigns that maybe have rules on what their organization can invest in. Being able to invest in bonds and have that flow into Bitcoin is good. Um, 11%, 12% yields. I'm that makes me that gives me pause. And the way that this is positioned a lot of times is that what MicroStrategy is doing is like a carry trade uh, on Bitcoin. You get paid 11%, and but you're assuming that Bitcoin is going to give, I think, MicroStrategy case, they're assuming around a 20 to 30% return. So you're picking up that margin. And when markets get volatile and when things go wrong, I mean, I just personally, I get nervous about things like that.
Yeah, it is. It sounds very easy, like you have the next 10, 20 years, you have a 20% return. You give the people 11% yield, and you make the margin from that. But it's often not that easy. And I mean, strategy a whole not a beast, and I don't want to compare them with anything in the past like
Mhm.
Celsius or something like that. But we had this yield on top of Bitcoin before. Never worked
Mhm.
out quite so good. But it is for me always like, if you want to take risks, like do it, but make sure most of your Bitcoin is in your control, in self-custody, cold storage somewhere. Like this is the safest, best space for Bitcoin. And it
Mhm.
already is such a strong asset that performs so good. Why do you need it amplified? Like why
Yeah.
would you need to have some amplification with that?
Yeah, I understand like that concern about amplification too. I mean, I definitely see the role for it for bringing in institutional investors that can't otherwise access it. That makes sense, but if you start to leverage up, and like MicroStrategy seems to be a bit of a separate beast all on its own too, just because of its development history and what they're doing, and whereas a lot of the other treasuries are not, and we've seen some stress already in some of the other treasury companies. So, and it just so happens, like in the Horizon Scan paper, right after that geopolitics section, the third section is about corporate, institutional, and market structure. So those were big questions that came out of the discourse last year, and like you said. I mean, we had all sorts of things, a lot in accounting and disclosure. So trying to verify what the holdings actually are. Structured financing came up, margin and collateral. Um, there's institutional stress testing, derivatives. I mean, there's all sorts of things that came up last year in the discussions. And so I think that, there were another 14 or 15 research questions for people within the financial sector. If they look at this, this scan that comes from the Bitcoin discourse itself, this real world discourse, it should give them some good ideas about what the real priority areas to interrogate in this space.
I think so too. Which is funny.
Yeah.
Like I really, I love the work that you're doing, because you really analyze the feeling that I get from so many Bitcoin conversation. You put into a document with a lot of background, actually a lot of more data than just my feelings. But it's interesting for me to like see the feelings that I get from all those conversations actually transform to like a paper, and is actually is there somehow.
Yeah, well, I bet I probably have. I'm not even sure. I'd have to look up. I mean, you did a podcast every day last year. I have certain sort of criteria on what I take, but basically all of your interview material that you did like found its way in here. So if you hear some of things that sound familiar, they probably come directly from some of your guests.
True. I made over 300 videos, so it makes I still like a small thing. Like you made like 2,300. So if like even all 350 or so that I made in there is like I don't know, 10%, maybe 5%.
Well, they're all considered, but like the way that I did this was that like I said, there was like I summarized each episode individually. So like I captured the transcript and I went through and asked about the issues that were discussed, and sort of standard stuff that now is really easy to do with AI. And then that pooling up, though, there was a lot of sort of between episodes, there might have been different takes on certain areas or certain types of questions, and there might have been certain biases in in some circumstances. So one of the jobs I had to do in this was make sure that the biases were filtered out and that the questions were framed in terms of like what research, if actually answered, would help decision makers like come up with support their decision making. So it's really about how do we build an evidence base that is not just sort of a lot of this stuff might be common knowledge, or it just like for Bitcoiners, it might be like they might be looking at some of the questions in this paper and saying, well, why would you ask that? Like, that's obvious. Um, but what I tried to do was make sure that every question was actually addressing a gap, and that it wasn't expressing opinions, that it was neutral in flavor, and that it was policy relevant. So that's again, my audience here is not Bitcoiners in the social media space. It's more policy analysts, science advisors, maybe elected officials, but mainly the staffer. It's everybody within the government apparatus and within corporate apparatus that might be advising senior decision makers.
Super. I think super important the work that you're doing. Is there like one dominant theme or one major takeaway that you got from all of this work from 2025?
Yeah, it's leverage is the big theme, and so the leverage was an issue that came out in prior years to some extent, and it came out in the 2025 scan is increasingly important. And especially how leverage interacts with other factors. So leverage on liquidity and leverage and transparency, information integrity. There's a lot of these things that like sort of like reinforce each other. And with leverage, I think what we're seeing right now, and it's possibly going back to our very early part of the discussion about what's going on in the markets. One of the other reasons that Bitcoin price might not really be moving right now very much is that we aren't just trading on a spot basis. We're having like futures. We're having synthetic exposure that's increasing rapidly. I don't know how fast it is increasing, and that's a really important question on its own. But synthetic exposure is increasing. And that means that instead of having this nice supply curve that's completely inelastic, what we get is this really elastic realm sort of around the current price. And so that might be factoring into pricing as well. The thing with leverage that is concerning is that, people layer it on different institutions. There's rehypothecation, so we don't know what exactly Bitcoin maybe is, how it's being used as collateral, or whether it's being used in collateral in multiple places. And everything in a normal, like in the legacy system is designed. That's the way it's designed. You can't call this market manipulation going on. This is just the way legacy finance works. You look at the gold market for decades, and it was in this tight range, and it was largely because there was this huge amount of paper gold that was out there at 10x. I've heard even maybe up 100x or more paper gold than actual physical supply. So when we had the gold market basically break out and physical gold became important again, you might want to have someone like fact check this, but I had heard, I'm not sure about it, but there was planes flying around the world with physical metal making settlement in different exchanges. And when you see that happen with gold and you see that happen with silver, silver has an industrial use, and that's AI relevant, which is other reason that silver is pushing up. But when you think of Bitcoin, we're just very early in this financialization phase, and so what happens if we have just a ton of synthetic exposure over the next 3 or 4 years? It's not inconceivable that we could just drift sideways and sort of consolidate for quite a long time in prices. But then at some time, leverage puts so much stress and it adds risk to the system because it interacts with so many things that at some time, if the leverage builds up, when that leverage unwinds, it unwinds really fast. And in the history of Bitcoin, all Bitcoin gains are made. Something like 90% of the gains is made over the course of like 5 to 10 days in a year. And what you might see if leverage breaks is you're going to see some huge moves. But when that happens, that's like really the $1 million question, because I think with paper Bitcoin synthetic exposure, there's quite a bit of potential just to keep it like rolling into the market for quite a long time.
Is the major learning that you got from the pricing models and studying the Bitcoin price that just DCAing is the best strategy by any means?
Yeah, well, I don't recommend any particular strategy per se, but I certainly my personal recommendation, my personal view on things is that you should never try to trade it. Um, that you're putting yourself too at risk, because if you miss a couple of those big up days, you've really missed the boat on it. I know back at the end of 2022, I guess it was, we were down at $16,000 in Bitcoin. And I debated right up to December 31st about selling some to do some tax harvesting and take a bit of a loss that I could use going forward. And I did that. And then, of course, Bitcoin goes up like 40% in January. And in Canada, there's a wash trading rule that you can't you can't sell an asset and then rebuy it within 30. You have to wait 30 days. Otherwise, you don't get your capital loss on it. And so I sort of learned the hard way on that. And I just am an advocate of like DCAing or investing whenever you have the money and just hanging on. You have to take a longer term time horizon. it might be really trying for people because, you're seeing the AI trades just go skyrocket, the good ones. There's memory shortages out there. I bought a computer a few months ago. Apparently, I can sell it for like 2x right now, just because of the shortage of gaming computers around. Um, you're seeing base metals, you're seeing different commodities. You're probably going to see a lot of movement in the small cap stocks, like in the next year or two. Um, just because AI impacts are going to start improving profitability for the companies that are actually adopting and being winners. So there's going to be a lot of temptations to sell off. But the thing is, like, if we are in a situation where leverage actually like has some adverse impact and it comes apart so quickly that you don't want to be lose your exposure.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control. And I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. Being with liquidity in this market makes a lot of fun. Like there's so many opportunities right now, like how you can make money and like where to put your money. I think Bitcoin for me obviously is the biggest one, and the simplest one to explain to my brain at least. But like there's so many opportunities. It's crazy with that cheap money.
There's so many opportunities, and you listen to like what the economy might do over the next like couple of years with this AI boom hitting and like just leveraging up GDP. And we have in one way a very wealthy society, but in other ways maybe a lot of people that are in stress because of it. You also look at the mainstream financial system, and this comes up more in the Bitcoin World's paper, but you look at that and, what are you optimizing for? In a stability first world, like what I call a stability first world, this financialization of Bitcoin, you're dealing with legacy financial systems that are basically laying down the plumbing for Bitcoin. And the idea being that you're trying to optimize exposure, and you're exposed to Bitcoin. You don't actually own it. You're taking it has all the you get the price movement benefit of Bitcoin, but it's like Bitcoin is being marginalized from what it was really meant to be. So one way, there's this concept in political science of voice versus exit. So, your legacy system and financialization is about giving Bitcoin holders or people with Bitcoin exposure voice. I mean, you have some sort of recourse if something goes wrong, you can sue somebody. There's all these different things. You have the ability to you interact mainly through dashboards. You track where your investment is. So it's exposure, but it's not ownership. And the thing that all the leverage and liquidity and the financialization really, really misses is that Bitcoin is built for exit. Like that's the reason it's there. It's not It's not trying to optimize for something continuing to go right and things to run smoothly and be continuous. It's optimizing for something to fall apart. And you look at our world right now and all the different things that could fall apart, and you think, okay, what's going to be breaking? Is it going to be the Japanese bond market? Well, who knows what the implications of that are? Are there going to be more geopolitical problems? Almost certainly, yes. What happens, like if the U.S. and China get into some sort of gold versus like Bitcoin reserve? We have all these questions. We don't know exactly how big stable coins. So in the U.S., it might be the case that stable coins are being adopted. They'll be the medium of exchange. The US dollar stays the unit of account for a long, long time, and Bitcoin might be very profitable, but it's marginalized to a role of being a store of value. So, there's all these more complex Bitcoin questions, like besides the questions that come up in the Horizon scan, there are these more in-depth considerations. So people, I think, need to also be thinking like who they are and what they want. Do they want something that gives them this optionality to exit? Do they want to be like real hardcore Bitcoiners that don't like get involved with financialization or ETFs, and MicroStrategy products at all? Or do they sort of tolerate it, knowing that they have the option to exit, and maybe they dabble in, or they at least don't like criticize it? Or you have these other Bitcoiners that are viewing, the Trojan horse idea or the gateway drug idea that exposure to Bitcoin, maybe even to stable coins, to begin with, is going to get people price exposed to Bitcoin. But then once they become comfortable with digital assets, then they'll move to self-storage. And there's quite a few assumptions in there that I don't know, like at each layer, to sort of go through what has to happen and what you need to believe. And I don't, that I'm not sure myself if those will all hold.
That was a cool sound effect. How did you make that?
I just bumped my hand into the mic.
Yeah, it's I I love that because it mirrors my strong belief that Bitcoin and self-custody is what really matters.
Mhm.
This is like we we might end up in a really great world. Maybe like nothing goes wrong and everything is great, and like no matter if you have it in a self-custody or not, like you benefit from Bitcoin. But we might also not. So your best
Yeah.
bet is to protect your Bitcoin and to have it in some kind of a safe storage. And I got that comment yesterday, and I always get a little bit annoyed by that because like people say like, oh, it's too dangerous to have Bitcoin in self custody because there have already been so many lost coins.
Mhm.
And I'm always so, and there is cases where I might say, okay, you shouldn't take self custody. Like if you have a hard time operating WhatsApp, like, or if you
Mhm.
have a hard time like with technical things in general, maybe self custody isn't for you right now. Maybe you have to learn basics of like how to deal with like computers and all of that. But the far majority, like if you can operate a computer and if you can operate like the normal IT systems that you have around you, I believe that you can learn how to proper self custody. So
Mhm.
it's just about your willingness to understand and learn and go deeper, or just like getting a partner that like understands that and gets to learn you, like the videos. Like there's a lot of things out there that you can do. So like I don't think anyone has a excuse of not trusting in themselves and doing the self custody themselves.
Yeah, well, it also, I think that I totally agree with all that. And I think, but there's also one deeper factor that sort of comes into it. It's like what your worldview is too. And like, and this comes back to you know, when the say stable coins are adopted widely and that boosts demand for US treasuries. The US dollar remains like basically it's globalized, becomes remains a unit of account in the world, or one of the units of account. Certainly there will be one from China, but you know in one world, it's like if you believe in the institutions and you trust the institutions that are in place, then the cost of going to self-custody and taking those risks is quite high. Like I'm putting my economics hat on right now, because you bear those entire losses. If you mess it up, like, it's like that's it. And so, yes, it takes education, it takes social norms, maybe communities that are helping to reinforce for newbies that, what the best practices are. But at a certain time, if cracks start to show in the institutions and in governments and in the economic system and in unemployment, during AI expansion, you've got all these like things that we've never really seen happen in the world. And at some time you start to think, oh my goodness, why am I optimizing for continuity and safety when safety is an illusion? And so then you start to think about, oh, I shouldn't be optimizing for the world as we have it. I should be optimizing like for a world that really starts to fracture. And that's when it starts to make sense. Then, even if self-custody has a cost, a personal cost, more and more people will start to look at it as being a personal cost that's worth taking, because the alternative is that you have things confiscated via centralized exchanges, or arbitrary rules or tax rules might be applied. You have debanking options. You have all the classic stuff that Bitcoin really performs well in safeguarding against. And right now, that's more of a question if you're like from Venezuela, or if you're from, some other parts, sort of the developing world, that tends to be more of an issue, or if you're under an authoritarian government. And so there's really a worldview piece in there too, that like people, maybe it's not just the things going on in the financial world, it's people's worldview that's starting to shift. And that shift would probably put things more, it makes the costs of self-custody, the potential risks of self-custody, worth taking, given what could happen badly if if this transition over the next 5-10 years doesn't go smoothly.
I think so too. And I think this is a very strong message and a very important message to kind of not end the podcast, but like have at the end of the podcast for the people to consider your own freedom, your own likeness might depend on it to a certain degree.
Yeah.
Really cool. Thank you so much, Mary, for being on the podcast. We have, as you know, an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And
Yeah.
the previous guest asked you the question, what's the biggest benefit you personally got from being a Bitcoiner?
I think I would say right now it's that optionality that we already talked about. I'm retirement age. I'm total boomer, and it has given me the option to think about leaving Canada, where I live, if I need to. I haven't made that decision yet, but it's something that I have looked into. Um, it gives me options about what I do and how I live. It's simplified my way of life, certainly. Like I just rent a place now. I don't own real estate, and that's a change. So I think, yeah, the optionality really, having optionality changes the way that you look at the world, and it just opens up, as the word like means, it opens up these new possibilities that you might not have considered for yourself or for your family before.
Optionality is freedom. And Michael Jordan recently said this, the other Michael Jordan said this recently on the podcast of mine. The Bitcoin yield is not 20 or 10 or 30%. The Bitcoin yield is freedom. Like that, and freedom comes down to having the option of not living in the country, just doing what you really want to. I love that point.
Mm-hmm.
Really cool. Then thank you so much, Murray, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
Yeah, my website is murrayrudd.pro. That's my blog. So I don't post all of the summaries that I do of the individual podcasts, but like I post a selection of them, usually like one or two a day. So you can see, so basically that site shows what my research process at the individual podcast episode level looks like. Um, I also have some original research that's on there. I'm not with Satoshi Action Education anymore. We've sort of parted ways at the end of this past year. And so I'm going to be doing more opinion-oriented things. Plus, I'm planning on starting like a podcast that's very educational-oriented and sort of like more on the, how do you think about economics and Bitcoin and some of the macro stuff, and that's in development right now. So I'm hoping to launch that in roughly 2 or 3 weeks from now.
Awesome. So maybe it's already up and running when this podcast comes out in like 2 weeks. So
Yeah,
if so, I will link it.
thanks. Yeah, I have a website that I can post or send to you. So the channel's in place. I just don't have any material on it yet.
Awesome. Then thank you so much for being on. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.